Hello and welcome to NavTalk. NavTalk is proudly brought to you by the Navwealth Financial Group, helping you reach your destination in life on purpose. My name is Simon Prowse and I'll be your regular host for this series of podcasts. And I look forward to bringing you interviews and content on a broad range of topics. Topics that will be educational, inspirational, informative and at times fun. Hello everyone and welcome to today's NavTalk. Today we're departing from the normal NavTalk approach and we're turning it on its head if you like. And I'm going to actually be interviewed today by Hayley Kalms, Head of Navwealth Bookkeeping Resources. Hi there, Hayley.
Hi, Simon.
And I bet you're looking forward to this, aren't you?
I am so looking forward to it. Thanks, Simon. It's nice to be in control for once, huh?
Yeah, well, I don't know about being on the other side here, but we'll see how it goes.
Yeah, you're probably not used to it, but here we go. So, Simon, to start with, just tell us a little bit about yourself and a bit of your background.
Okay, that's interesting. I've been working here with Navwealth for about 11 years now. Prior to that, I had my own business, BTP Consulting, for about 6. And prior to that, a variety of gigs, essentially going back to when I was about 15 and looking for weekend holiday work, and I ended up in an accounting firm of all places doing admin and filing, which was wonderful at the time. So I've been playing in this space in the accounting world for an awful long time.
You have. Destined, meant to be.
Well, sort of. I went to uni and thought I'd do a marketing degree, but all my subjects I kept doing well at accounting, so I think it was something in genes or something along those lines that I ended up being an accountant.
There you go. I think you would have been good at a marketing, bit of a salesperson, huh?
Oh, look, it wasn't bad, but yeah, however it turns out, accounting was my calling.
Yeah, well, we're glad to have you in this space and your experience. So today we're going to have a look at structuring your business for success if you would like to sell your business. Is that right?
So structuring for success is about two things. It's laying what we're looking at, success being an outcome or the sale of a business, which everyone should be, and if they're not, I challenge them. If you set up a business at one time or another, you should be planning to exit. And planning to exit is all about the best exit you can get, whether it be financial or whatever. But generally speaking, you want to sell it. So structuring for success is about having the correct structure in place, or foundations, if you like, the groundwork, the entities, and then obviously the sale and planning for the sale.
So you sort of want to split today into sort of two topics or two sections. Do you want to explain that a bit more?
Yeah, I think it's probably too much to absorb, Hayley. So what I wanted to do is probably break this talk up into two. And the first part being setting up the right structure and all about structures. So I'd like to spend a bit of time on that to give everyone a bit of an idea. And then part two is essentially the selling part or planning for the sale. We covered a bit with another Nav talk with a fellow by the name of Peter Hickey, and we were talking about exiting the business. But this is more about the accounting and taxation aspects to exiting the business that I'd like to talk about. Okay, so part one in choosing the right structure is to us at Navwealth and for me and everything I'm about is there's two guiding principles to setting up the right structure. The first is KISS, and the common acronym KISS is Keep It Simple Stupid, but I prefer to call it Keep It Simple Solutions. And the second is the understanding. Now, keeping it simple is pretty obvious. We don't want to create a structure that's just is not conducive with what we're trying to achieve. Like it's no use having multiple entities if we don't need it. So the idea is to keep it as simple as possible, and that also keeps compliance costs and setup costs down. And the second part, which is probably more akin to what I try and achieve with clients, is the understanding. All too often I'm sitting in front of a client or a new client and we look at their business and their business structure and they really don't understand that structure. And importantly, how that structure works or why it was put there in the first place. So my aim or our aim at Navwealth when we're setting up a structure is to make sure our client is incredibly comfortable with it and understands the reasons for it. So there are two fundamentals when we're going to set up an entity.
Now, can we go into that understanding a little bit more? How would you portray that? How do you get that across to a client? getting them to understand it? Do you use like mind maps, or how do you do that?
Yeah, you're spot on there in terms of the mind maps. I think that's a classic, really easy way in terms of pictures. Most clients, when we're looking at setting up a structure, will first go off and set up a mind map. Now that is after we've worked out the structure, that is, but we'll provide them with a mind map, and it shows where the funds flow and the reasons for it, and there'll be a bit of a breakdown of why for the structure.
Yeah, that's fantastic, because that's one of my major, I think, with bookkeeping clients. They often ask me, can you please translate what the accountant has just said, because they can't see it, they can't picture it. So I think that understanding gives you it means the end is going to be a better outcome.
Yeah, and I think most people are visual. I know it's more common in men than ladies being visual, but I think when you see that visual grouping of the structure, it just makes it easy to pick up and go, that's why.
Yeah.
And then in terms of why we set up this structure, it's really important to understand that we're trying to achieve two key outcomes for a client. It's the asset protection exercise, and that is the fundamental of what we're doing. We don't want someone's house or their hard-earned investments to ever be put up for grabs or potentially be attacked by a predator. So asset protection is one of the key reasons for a structure, and the other is the retention of profits and the building of wealth. So when we're looking at a structure, and if people are looking at structures, they're the ultimate outcomes, if you like, of putting a structure together.
Okay, great. Yeah, because often a lot of people are still in a sole trader or that sort of setup, and that doesn't provide much protection for them, does it?
Oh, absolutely not. And I'll talk about that in a little while, but it's pretty critical that a client understands, or people understand that. There is sorts of various protections that can be provided within a group structure, and I will dive into that in a little bit.
Okay, great. What are the other sort of key drivers in considering the correct business structure for someone?
Okay, so whether we do this in a formalised manner or a non-formalised manner, when I say non-formalised, it should be going through one's head when you're talking to a client. But essentially the process of working out is the ideal structure is probably highlighted within 7 steps, and 7 is my number, but look, it could be any number. But generally speaking, I'm looking at a few things when I'm talking to a client. So firstly, the ownership and the funding. How do you want the assets, or how are the assets of the business that you're buying or creating to be owned, and how much protection is required of these assets? For example, you could have a very large piece of equipment that is producing the income, and we might want to segregate that equipment from the trading itself, so as we protect that equipment. If we're buying a property and we're going into a rental arrangement, quite often we'll need to protect the asset versus the operations of the rental. Rental's probably not the best example, but segregating those assets from the trading vehicle. Mm-hmm. The next is control, and control's a pretty big one in terms of how many people are coming to the table, and how are those people going to interact, or how are those entities or people going to interact. So control's a big one. The setup and maintenance and eventual wind up or closing down, and the costs of that. So it's pretty important. Risk management is about the entities within the group and mitigating their inter-reliance or just separating if it's required. Operations and the ability for the structure to meet legal obligations and requirements around such thing as professional services. Are we allowed to have this structure in place? Is there any impediments to that? And the ability of the structure within the industry. The financial returns, the extent to which we want to pull out money, and how we want to generate the income through that business, and where we want to put it. Tax efficiency and optimising the taxation outcomes from the structure. So if you like, those 7 that I've mentioned are probably the key in what I look at and what most people should be considering when they're looking at a structure.
Yeah, and that would look quite different from a sort of a service-based sort of business versus someone with equipment, say like a builder per se. So the advice around that would be quite different, wouldn't it?
Oh, absolutely. It's surprising, even two builders sitting together, and you extract from them their circumstances and their position in life and all the things that are going on within what they're trying to achieve with their business structure. They could end up with two different structures, for entirely different structures, even though they're doing the same thing and producing building products.
Yeah, great.
Another good example, especially with builders, is the requirements of the insurance industry and how they want to keep assets within that trading vehicle in order to give homeowners warranty assurances, and that can prove to challenge a business structure in itself, and that's just one example.
So there are different types of structures that we can use when we're considering these key drivers. So what are those? I think there's about 4 main structures that we can set up for a business.
Yeah, you're spot on. Now, when we say there's 4 main structures, it's important to understand that these are the fundamental different types, but there's all sorts of connotations, and I'll mention a couple as we're going through it. The other thing to note is, whilst there's 4 main types, you could have a variety of the types within the group, which could effectively mean your structure has combinations of all these in it. So generally in Australia under common law, there's the 4 principal types of structures there's a sole trader, which is the simplest of them all. It's a person that says, I want to go into business, and they go off and get themselves an ABN, and there they are. The characteristics of a sole trader are that it's not a separate legal entity, it's you or me. We could have a trading name. It could be Hayley Kalms trading as Bookkeeping Resources. So you're still a sole trader, but you can have a trading name. So the ABN is you personally. Now the benefits of a sole trader is it's really easy to get in and out of. It's just a business attached to you. The downfall is that the liabilities around a sole trader are unlimited. So if anything ever went wrong or you were challenged, or I call it predators. Two biggest predators are personnel or staff and contractors, and or your clientele. So as a sole trader, your predators can potentially, if they're deemed to get or win, or they can challenge any asset that you have your fingers attached to you, being your house, your car, anything. So unlimited liability. The next type of structure is a partnership, and a partnership in its classic sense is 2 individuals or 2 entities getting together, and we're going to do this together. That's a partnership. A partnership is characterised as not a separate legal vehicle. It is 2 vehicles, if you like, 2 individuals or 2 companies or whatever, and the partnership itself is an agreement between these 2 vehicles or 2 entities as to how they'll operate. So essentially, the partnership agreement governs the partnership. It can be a percentage of ownership that can range from 1 to 99, and you can have all sorts of rules effectively around it. The interesting part about a partnership, again, it's not a separate legal vehicle, and the entities to that partnership have unlimited liability like a sole trader. Then we get on to into the more sophisticated part of the world, and most people understand, but then we're into a company. And then we get into a company. Now, a company, unlike a sole trader or a partnership, is a separate legal structure, and a structure that's created under the Corporations Act and governed by ASIC. So that company will generally have a director or group of directors, one or many, that run that company, and they run it on behalf of the shareholders, and the shareholders are effectively the owners of the company. I think most people out there would understand shareholding through either their super funds or directly go and buy shares in BHP. It means you own part of BHP. You don't run BHP. You're not bound under any circumstances to BHP other than you bought the shares and you hope to get a return on those shares, being a dividend or one day sell it for a profit. So the directors run the company on behalf of the shareholders, and the shareholders ultimately own it, and their liabilities are limited. Well, the company itself liability is limited to its assets, and the shareholders are limited. Their liability is limited to what's called their paid-up capital. So I'll give you an example. If you form a company and you issue 50 shares of $1 each, the paid-up capital is $50. That's your liability is limited. A company being a separate legal entity has a few other sort of benefits or downfalls. Firstly, it is separate legal entity, so there are impediments to setting it up. It's not free, and you need to do a tax return and a set of accounts individually, so it's separate. And there are benefits. The tax rate is quite good. Companies can retain earnings, and they operate separately from the people who own it and other directors. So the liability is limited, which is fantastic. The final type of structure or entity, if you like, is a trust. Now, a trust is an entity where assets or something tangible is owned on behalf of another person or entity, and that's the beneficiary. So a trust has a trustee, controls and owns the assets, effectively on behalf of the trust, which is on behalf of people or another group of people that are the beneficiary.
Thanks, Simon, for explaining all those structures. I mean, to me, it sounds like it's about protecting yourself, looking at those different structures as well. That's really important. Are there some examples that you can give us? So you did say we can use a mix of these structures. How would that work? What would that look like?
Yeah, that's really interesting, Hayley. Look, I think it's best explained in the mind maps, actually, because a picture tells 1,000 words, as they say. Why don't I put up a couple of alternatives for anyone to download and attach it to this talk? But to answer your question, you could have a variety in the group. For example, you could have a trust with a corporate trustee. Corporate trustee sitting over the trust protects that trust because it's the trustee who's actually responsible for operating the trust on behalf of the beneficiaries. So you could have a corporate trustee over a trust, and the beneficiaries being mum, dad, and the kids, and anyone that they choose, really. And above that trust, or owned by that trust, could be a trading entity that's dealing with the business itself. So you've got a company doing the trading that is owned, shareholders are the trust. The trust has got a trustee sitting next to it and running it, and then the beneficiaries being the kids. And that's a classic style structure that allows for asset growth within the trading entity. It allows distribution of profits in an efficient manner. So it's got a lot of the factors that we look at in trying to generate a vehicle that's going to be useful for a client.
Yeah, but I think we should remember, I think you mentioned before, you can have two builders. They're in the same industry, but they could be very, very different. So their mind maps and their structures could look very different.
Exactly. I mean, if you've got a builder who's got a significant amount of assets, for example, an excavator and maybe a big bulldozer, they're not going to want to have those assets sitting in the trading company if there is any potential that they could lose those assets. And we're talking hundreds of thousands of dollars. So it might be better to have those sitting in a separate vehicle or a separate entity, and they're allowed to use it within the operation vehicle, but it's not owned by the operating vehicle, so you're protecting it.
Yeah.
Another really good one around that is generation of IP or intellectual property. Intellectual property can have a significant value, and the last thing you want is that intellectual property to be challenged through your trading entity and lose that asset. So we tend to segregate those when we're looking at a structure. Look, generally speaking, we will sit down with a client, we'll identify what they're trying to achieve, we'll identify the business they're in, we'll identify the sector they're in, we'll look at their overall life and where assets and things sit, and we'll build a profile which will allow us to build a structure that suits their needs. And as I said, If we do it with them, the idea is they're now getting an understanding of why, coupled with the mind map on the back end of it, which explains the reasoning for it and the benefits or other. It generally provides them with a good footprint to understand their structure.
Yeah, definitely.
And one last thing just on that structure, and I'll leave the topic. Please go and seek advice. And if you don't understand your structure, again, seek advice around it, because getting the right structure in the beginning can save you so many thousands of dollars in the long term. And if you get it right, you really set yourself up with an efficient. It's the foundations for everything you do for the future.
Yeah, we see that often, don't they? People come to us, they're just not set up correctly and they want to sell their business. They're at that time and it's just the setup's not good.
Yeah, that's not efficient.
Not efficient.
Thanks for joining us today for NavTalk. You can listen to other podcasts in the NavTalk series via YouTube or where you get your favourite podcasts, or simply search NavTalk. Be sure to follow Navwealth on LinkedIn, Instagram, Facebook or Twitter. And please, if there are any particular topics you would like us to cover for a future episode, let us know via our website. I'm Simon Prowse. Until we talk again.